Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and with me is Shel Patnagar. This is Market Today, a show where we'll help you understand the closing action on the D's trade. It's panned out to be another fantastic edition on the Indian equity space. Record highs is what we have seen on an intraday basis on both the Sensex, the Nifty Bank and even the mid and the small caps as well. Right now, if we speak, markets have turned a bit flattish. When we talk about the Nifty Bank, it's about 0.03% higher, holding above that 53,100 odd mark. The Nifty itself is up about 0.1%. 24,320 odd levels is what you can see right now. Is the pharma and the IT space that is leading from the front in trades today. Apart from this, it's the realty, the broader markets, auto space, metals. Those are also contributing. The Nifty Bank, like I said, is absolutely flat, and within which the constituents of financial services have slipped into the red, where the PSU banks and private banks are still holding on to some gains. Top movers on the Nifty include from the IT names, so like HCL Technologies is up and about. You also have ICICI Bank that's still contributing about 2.5% higher in trade. Sun Pharma, Infosys, HDFC Life, TCS, these are some of the top movers as far as the Nifty is concerned. When we look at the top drags, where is the pressure getting exerted from? HDFC Bank has now slipped about 2% in trade. Remember, yesterday we were talking about it's coming back and now seen some profits being taken off from the high levels. Bajaj Finance, Tech Mahindra, Wipro, Adani Enterprises are the top losers at this point in time. The PSU stocks are still holding up about 0.6% odd. Good afternoon to all our viewers and good afternoon, Shel.
Good afternoon, ladies and gentlemen. We'll go to the core where all action is at the moment. Broader markets are absolutely flat until you're looking at the pharma index, but a little while later we'll be discussing it. All through Sakshi, last week we've been discussing which is the defense stock that will hit 10% today.
Yeah.
And by and large, we would catch one by that eeny, meeny, miny, mo principle. Well, today it's two.
Cochin.
A beautiful 18% uptick on Mazagon Docks.
Yeah.
And of course, Cochin is 10% higher. Garden Reach is 7.5% higher. And you have a strong move coming into stocks such as BEL, BDL,
Yeah.
and of course BEML. Now, what is happening is that a recently launched NFO is on the hunt. This was a defense specific fund that was launched. They've raised a fairly decent amount, and Mazagon Dock is one of the top performing stocks today. Look at the volume on this one. You have 9,360 crores worth of transactions done on Mazagon. Cochin 3,364. These are the two top traded counters. Then comes Garden Reach and Hindustan Aeronautics at 5th and 6th place respectively. 2,100 crores and 1,700 crores. Very, very strong moves coming in. Sakshi, one very interesting data that you mentioned was that the market capitalization of Mazagon Dock crossed 1 lakh crores.
Yes.
Well, this was an IPO that was floated in September of 2020 at, hold your breath, 145 rupees. And in a span of less than 48 months, the counter has gone up by 38 times. So that is the power of equities, ladies and gentlemen, and that is the power of consistently holding a multi-bagger. Will more gains come from these levels? Should you enter now? We leave that for experts to answer. But for those who have the counter, those who have any of these 5 stocks in their portfolio, please do not sell at current levels. What is also interesting is the pharma space led by Lupin. A 3x rise in volume as far as Lupin is concerned, and a breakout on the stock. Very, very strong moves coming in. Kotak had upgraded this stock in the morning, as also strong moves in Aurobindo Pharma, Sun Pharma, and the highest beat counter there is Laurus Labs. So that's the broader markets, ladies and gentlemen. Very, very strong shows in large mid caps, strong showing in pharma across the board, and absolutely flat trade on Nifty and Bank Nifty. It's the weekly expiry of the Nifty, it's resting, and the Bank Nifty is flat too. Sakshi.
Right, let's welcome our guest on board with us. We do have Mr. Anand Tandon now joining in, well-known market expert, and you've seen him several times on our channel as well. Warm welcome to you, Mr. Tandon, and thank you so much for taking the time out. It's a great day to welcome you. The markets have been soaring higher and surprising everyone every day. You tell me, how are you looking at the markets, sir, at these record high levels? Is it still comforting for you? At these levels and the way it has been rallying, or are you getting dizzy at these sky high levels?
One way of describing the market is that this is a melt up, and this is the time when you make the maximum money, but also run the highest risks, because the advantage with the problem with a melt up is you cannot time it, and you do not know how long it can continue. So the best I can say is enjoy the ride, stick with your asset allocation, and don't try and do cherry picking in terms of lowering the quality of stocks. The biggest risk I have seen in my past history as well has been that when you try and find stocks which haven't performed already, and therefore you think that you'll buy less expensive stocks and sell the more expensive ones. In a situation such as this, you end up holding lemons. So do not reduce the quality of stocks, and even if they are, so long as they are good quality stocks with decent earning profile, valuations will come back to bite at some stage, but enjoy the ride.
Enjoy the ride, you're saying, Mr. Tandon, but what if, this ride also goes down? Every ride that we take in the amusement parks, they go up and they go down also. Are you also looking at some scenario where this ride is going to take the downward path now?
Without question, every ride does come to an end, and the more the kind of euphoria you get, the sharper will be the correction. The problem is that you can call it very early, and then you find that if you picked it up early in the game and you've stepped out, you will lose all the upside. As I said, these rides can go crazy, and while we have seen some craziness in mid cap, small cap, I don't think we have seen that kind of craziness in the frontline companies. If you are actually banking on the fact that there will be a return of the FII investor to the Indian market, I think you may find that the frontline companies can actually do quite well even from here on. So there are still places in the market which are not which are not cheap, but they are not crazily expensive. And to that extent, there is no reason to be necessarily looking for a correction immediately, especially in the frontline indices. But overall, I think one has to be more and more careful among the smaller stocks as they continue to rally.
Right. Mr. Tandon, good afternoon. Shail Bhatnagar this side. I think when we first met each other, it was 1997 or 1998. You were based out of Hyderabad, if I'm not mistaken. And that was the time, of course, it was a downturn in the market, but the uptick started in 1998 with the dot-com bubble. It's been one of the biggest learning experiences of a bull market that people sell their blue chip stocks and get into mid caps till the time the bull run ends, and then regret their decisions. Tell us, where in blue chips do you still find value? One of your favorite stocks, HDFC Bank, this week clicked like how? Do private banks interest you? Do large cap cement companies interest you? Where do you think is value to be had?
Well, let me first start with a small correction. I am currently in Hyderabad. In 97, I was in Bombay. I moved here only in 2011. But yes, there has been, I have seen several cycles of markets moving up and down, given that I started in the market in 92, just as the Harshad Mehta bubble was about to collapse. So I have started off with my career with seeing a big bubble coming down, and then almost a decade where the market did pretty much nothing. If you were to look at the frontline indices, small cap do make money. Let us not not get that right. At the end of the day, if you look at it from a very long-term perspective, the reason. So even from the theoretical perspective, you are going to invest in small caps only because the return expectations are higher. Otherwise, they are already more volatile than the large cap. So if you were to say that you want to take a higher risk of volatility and therefore of losing money, why would you do it unless you expect a higher return? So over, let's say, a 2, 3, 5 year, 5 decade kind of period, I'm sure you will find that the small caps do outperform. But that comes with a caveat, which is that they also turn to be very much more volatile, and their movements therefore will be a lot more difficult to time when they get out. More importantly, they're also fairly illiquid, especially the smaller ones. I'm not talking about the large small caps these days. I mean, given the definition that SEBI has put out, the number 300 company in the country is also a small cap. But in terms of market cap, it will be fairly decent size. The liquidity becomes progressively lower as you go down, and that is when the problem arises, because while it is easy to come in a stampede, when you're going out, there is going to be a problem. You can't be the first out of the door unless you're extremely lucky, and then there is a very good chance that you will be trampled along with the rest of the crowd. So therefore, when the market is showing signs of extreme euphoria, it makes sense to stay in portfolios which are reasonably liquid, even to the extent of sacrificing possible gains. So from that perspective also, it makes sense now to start moving towards the front line besides the valuation. Coming to your specific question on banking, there is no question that right now the banking sector, for some reason, is not finding flavor with the market, and has been a less of a performer than perhaps many of the other sectors. That said, it remains one of the best levers to the economic growth, and therefore, if you are really betting on economic growth, that's the place to be. Credit growth is actually doing very well, and we have many banks which are now doing a credit to deposit ratio, which is actually almost close to 90. Therefore, that means they have to borrow desperately from the rest of the market. So you have to look at deposit franchises, and that is best done with the private sector.
Right. Mr. Tandon, this is just an aside. Would you remember the value of the Sensex in the first month when you joined Dalal Street? It's 80,000 today. We were just doing a recap with our all old friends who've been in the market for about 2.5 decades. Just a query, what was the value of the Sensex when you came into the market?
I do not have a perfect recollection, but it would be of the order of 4,000, because that was the bull run at that time. And I think, if I remember correctly, it was around 4,200 or 300 or thereabouts, from where it turned down and collapsed. So that was approximately the level at which the index was. Incidentally, it was also the index till almost 1999. I mean, after 97 fall. Also it was still there. So, you had almost a decade-long zero performance on the frontline index.
Right. So that's an interesting anecdote. From 4,000 to 80,000, you've actually seen all the cycles that the markets have displayed. But what next after 80,000? How soon do you think 1 lakh can be seen on Sensex?
So these are just numbers, right? It depends on what you're looking at in terms of compounded growth. At the end of the day, let us say you continue to do a 13-14% compounded growth. That means it will double every 5 years. So, specifically, if you do 15%, it will double every 5 years. So even if you take a little less aggressive number than that, given where we are starting from, even a 10% growth will mean that in 7 years it will double. So it all depends on what kind of number you are starting with. These are just numbers. In fact, it would make sense to perhaps drop a decimal from the index so that it becomes easier to track.
Oh, okay. That's an interesting take. But I don't know if how many people would be okay with looking at the Sensex with 1 decimal point less.
No, you can do a split, as it were. I mean, the index can be recast.
Sakshi, yes, absolutely. In fact, Sakshi, one of the best performing funds in India, which is the the Nasdaq 100 ETF, actually did that. They split the stock. They split the ETF 10:1, and from 1,100 rupees it went down to I think 110, if I'm not mistaken. And one day I woke up and I said, what's happened? And I realized they've made it affordable. See, at 80,000, when you look at the option chain and all, it becomes a little dizzy. I was going through old YouTube videos, and there was the Nifty at the Nifty at 8,000, 9,000, and option prices were 50 rupees, 45 rupees. Those were good times. now if you look at the bank nifty option price 900 rupees, अभी यहाँ से क्या करेगा इंसान? But that's how it is, and sensible people generally have good stock splits and bonuses to make the counter affordable. Remember Cochin Shipyard, it was at 2400, फिर split हुआ, 1200 रुपये से गिर के 700 रुपये आया, अब 700 रुपये से बढ़ के फिर 2500 रुपये हो गया. So that's how life is, and Anand ji is right. After 3 decades, he's seen it all. Anand ji, any mishaps, any regrets in the market? I remember a wonderful line that you once told me, that stocks like Infosys correct 50%, and there are many stocks that correct 90%, and then still correct 90% from that 90%.
The field is littered with stocks which can't come down and have fallen by 99%. Every cycle peaks out with the leaders doing a major correction. I mean, you shouldn't forget the fact that even in 2008, the index itself fell by about 70%. So it's not as if the stocks alone have to react. It is the index itself that can come down dramatically, which means that most of your frontline companies had to have fallen in that order of magnitude for you to have reached that level. So yeah, I mean, there are, just like there is no upside limit, there is no downside limit for many of these things. The only advantage this time that I see is that barring small caps in the frontline companies, those that have gone up are not companies which are flaky by and large. There are flaky companies in the small cap universe, but that's difficult to figure out. Those may be independent cases. The frontline companies, the mid cap, large cap companies are not the shadier ones. They have got real businesses. You may be valuing them at numbers which are very high, or assuming too much of growth for too long, and therefore you could argue with the valuation. But whether or not that business will survive, I don't think that there are too many challenges for that. That said, as you just reminded me, the reality is that a company like Wipro had fallen some 90% plus. A Z business had fallen that kind of number. So it's not as if you had to have non-existent businesses before you actually have a correction. The corrections are very painful, but they are part of the business. You cannot just stay away from everything and hope that your portfolio will not take a correction. Unfortunately, what is happening is that many of the newer investors who are coming in today seem to think that when we talk about 15% compounded, it will be as if it is a debt instrument. It is not. You are getting supernormal profits right now. It means it is taking from the future, and the future earnings, not the earnings, the future returns, therefore have to actually come down to compensate for the returns that you've already booked right now. So if you don't exit at the right time also, you may find that you'll have a very long period of time before the businesses actually come back and justify the kind of prices you're seeing.
Okay, that's a very well made point, and we shall definitely keep an eye out on that, the way we have to really approach prices and levels in stocks. But Sandeep sir, also do tell us, how are you assessing these wild moves on the defense pack? And the story of Mazagon Dock, Cochin Shipyard, like how Shell was pointing out, Garden Reach, these stocks have doubled in just 1 month, 2 months, and there is no stopping, there is no let up in the kind of rally that there is. No matter how many times we feel that the space is too overheated, is this a froth? How are you assessing the defense story? Because every time we caution our viewers, they feel that we are not telling them the truth, and because the next day the stocks will again do double digits and rally 20%, 10% higher.
Unfortunately, the only way to experience heaven is to die. Without that, it is difficult to learn from somebody else what kind of what you will actually go through when there is a fall. It is someone who has died a few times who can only tell you that, look, it is extremely painful, very difficult to live with it. But that said, so I've got out of the business of telling others what to do. You decide for yourself what allows you to sleep at night, and just make sure that you hold on to a portfolio which does not give you sleepless nights. At my age, I think that is the most valuable thing that you can have, a good night's sleep. Given the fact that you have a 100% increase in defense, the question is, which country is spending that kind of money? Certainly not India. What is the order book we will get? And more importantly, and this is something that I would really like people to think about, can you actually execute at 100% growth? What is the growth that we have seen in these companies, even in the last 2 years, let us say? Because the reality is these are technical subjects, right? You cannot suddenly recruit. If you have, let's say, 1,000 engineers working on your submarine, you want to double that, you cannot get another 1,000 qualified submarine engineers. So the reality is you'll be able to grow 15-20% top line, that's it, year on year. And beyond that, it will be extremely difficult to do. Now, at some stage, the order book will suddenly wipe out, or it will come down dramatically, and therefore you'll find that, having bought something at 50, 70, 80 times, a price to earnings is not going to pay you, because you'll have to wait for that many years, and that's not usually the time cycle that most investors, especially in the retail, are really looking at. So by and large, I think the best way of dealing with these is to slowly keep stepping out. Yes, you will leave some upside, but the last 5, 10, 15% is always the most difficult. It is best left for the guy who's the newbie. After all, he has to pay his tuition fees as well.
Wow, that's a wonderful way to explain this. So should one really idly book out those who have experienced this 100% rally, not be very greedy?
I think you've been greedy enough, but then there is no limit to the greed that one has.
Okay, wonderful. So there you have it from Mr. Anand Tandon as to what should you be really doing with the defense story, and how should you really, in reality, look at the kind of moves that are coming in. But where else are you really looking for value, if not these defense names which have already rallied quite a bit, and there is a lot of overheating here? Where do you still find comfort at sky high, rocketing levels on the markets?
There aren't too many places where there is value, right? That's why the market is expensive. That said, the question is now, within the universe that you are left with, what do you buy? So as I said, banking,
Yes,
to my mind, remains surprisingly cheap even at this pace, both from a relative perspective as well as the rest of the market perspective. Many of the other, sticky finance businesses, and something that I continue to think have some value. So while insurance, etc., is not cheap, but the reality is that there is still a long runway. So the way to you compensate for is that you lend them the time frame over which you are looking at your returns, lower your expectation of immediate return, and see where the chances are that the growth will not get perturbed, even if there are some changes that you have not anticipated in either government policy, in environment, geopolitics, what have you. And those are places like, for example, insurance, which I think are fairly interesting and worth looking at. You go for boring stocks where there has been less of an attraction. Unfortunately, most of our staples trade very expensive. They are not particularly cheap, and their volume growth has been abysmal. But from a protection point of view, perhaps they may fall less because their ROEs are fairly strong and will likely remain strong. And if you are arguing for improvement in the rural economy, you may actually get some volume uptick in many of these staples, etc. So one has to be somewhat selective. I find that there is too much of an expectation of sudden growth. So for example, pharma has suddenly come back to fashion. And while one can argue that there are a few companies which are doing well, companies like Dr. Reddy's, for example, are going to struggle to be able to meet the same kind of revenue that they have done in the last year, in the next 1.5 years. Their major products are going off patent. There are problems in terms of being able to sustain growth, to maintain the top line rather than growing. So suddenly, when these kind of companies also show a lot of activity in the stock market, one has to begin to feel that it's the better thing is to actually sit on the outside and stay with a little bit of more cash.
Right. Mr. Tandon, we've been advising a lot of sanity in the market on a regular basis, and on a daily basis, we've been proved wrong. And that's the issue when it comes to forget justifying risk, just look at risk. But people are just not interested, and I am sure you get as many phone calls as we do on asking कि भाई ये कब रुकेगा, अब क्या करें, we exited early, we don't know what to do. And it is this, it's not a feeling of missing out, it's the anger the anger of not being able to participate in this fabulous rally that's unfolding in front of us, that prompts people to do, how should I say, difficult things in the cash market. And I'm not even talking about options. I'm not even talking about the kind of mad enthusiasm that you see for options trading. Be that as it may, perhaps one of the spaces where you see some decent valuations still left on the table is IT, and it still does not have a global business tailwind, but yes, the Nasdaq is at a record high. Within the IT space, would you have a choice at current levels, or would you still stay away?
So the only reason for IT to not to look attractive is because it has grossly underperformed and is grossly underowned. But if you look at the valuations there, given the profile of the business itself, so if let's step back a few years, the major story from IT was 16-17% minimum growth in terms of top line. Dollar, which will give you a couple of percentage points extra in terms of rupee dollar conversion, and therefore, and the ability to generate 27-28% EBITDA margins, which meant that you had a very healthy bottom line growth. That story is now on its head. It's not coming back. We are now talking about struggling double-digit growth, if that. You're talking about a rupee which is fairly stable compared to the dollar. Perhaps, there is some chances that if we actually have our CAD positive for some sustained period, you may find upward pressure given the fact that the US dollar is becoming more and more weaker and less acceptable as a currency of choice, and continues to hold its position only because there is a lack of an alternative. And a business outlook which has become fairly bleak. There is no question, no matter what anybody tells you to the contrary, that the impact of IT in terms of AI in terms of IT services, the way we've traditionally done it, will be hugely negative. Where you would have used 10 engineers to do the coding, you can probably do with 2, because the AI will do much of the rest. So today, if you see all the large orders that are coming through are cost takeout orders. There are companies overseas who are giving you the people and saying, you know what, next 3 years, I'll pay you their salaries. Just take them off my books so that I don't have to deal with them when they become surplus. That's what is cost takeout. So you may find that these companies are able to grow, but they are growing because they are picking up the likely problems of the manpower that they are holding, that they're acquiring today for the future. So none of these things look particularly positive. Now you just look at the valuation today, and the frontline company like a Google trades at 23 times forward earnings, grows at 15% minimum. Same as TCS. The best TCS can do is 15% growth. So same growth, 28 times valuation or 29 times valuation compared to Google, and the quality of business, which is not even, you won't even begin to compare. There is no case right now, even today, why you should not be investing in the US companies. So as you said, Nasdaq is at a peak. Buy the Nasdaq rather than buying the Indian IT companies. From a portfolio perspective, for people restricted to India, there is no harm. You can buy some, buy some TCS and Infosys or whatever you like. But there is really nothing much to talk about.
Mr. Tandon, one interesting thought that I have in my mind is that for the first time in 25 years, and you watch, and I have watched IT as much as you have, of course, you sit in a tech city. This is the first time when on an annual basis, the net number of employees have actually decreased in the top 4. My understanding is just as AI gathers pace, you will see these companies leaner, meaner and fitter. And that is the time probably that there will be an uptick that comes on margins. There will be an uptick that comes on order sizes. So far we've seen IT as as a transfer pricing kind of a mechanism. Instead of hiring at $70 an hour in the US, you hire it at $13 an hour in India. I believe that is about to change. I don't see IT companies in India vanishing away. What's your thought here?
So there are lots of things that are happening in IT. It is time that we now moved to offering services or products rather than just offering conversion, as you said. Unfortunately, most of the frontline IT companies still get most of their money by this arbitrage in terms of salary, despite whatever they may say that it becomes that, and they may say to the contrary. So the reality still is that you are actually exporting manpower. Yes, you have developed systems. Yes, you have developed the ability to do it remotely. Yes, you have created efficiencies in the code. Yes, you have created the entire training ecosystem. The reality is that most of the mid-level managers and the senior managers in the IT companies are actually just managers. They are not technologists. And that, unfortunately, is where the lacuna lies. We need technologists running technology today, not chartered accountants, not managers who know how to handle army of people. We need people with a vision of what they can do, which will impact the life of people going forward. That is what you are seeing in the US. That is where the most of the innovation continues to be happening. How many companies are you seeing today which, for example, have their own biotech portfolio in India? How many of them have their own tech for space in India? How many of their own have real consumer facing tech in India? You just saw coup going down today. So you have a company which has got a similar profile. Now, copycat business is not necessarily the best way of doing new technology innovation. Unfortunately, our VC ecosystem is based on copycat. So you will look at what's happened in the US and fund that in India. So all our top IT companies that you can see, consumer facing companies which are using IT, every single one of them is a copycat of what is happening in the US. None of them are an innovation of their own. So, we have a long way to go to catch up. Will IT go out of fashion? Absolutely not. Will it change unrecognizably from where it is? It is already doing it. We are just too late to the party.
Okay. Fair enough. We've noted that down, sir. Sir, about time for when we have to let you go, but we will not let you go before asking you, which is that last stock that you may have added to your portfolio, and which is the last stock where you have booked profit from?
So I have been selling some of my capital goods part of the portfolio, and adding a bit of on the financials, uh, and that's pretty much it.
Okay, so you're not giving us the name right there. All right, understood. Thank you so much, sir, for being with
Thank
us
you for
on
having
this
me.
very special edition and sharing with us all your thoughts and ideas. And we will come back to you for understanding, where exactly is value to be had in this current market space too. With that, viewers, we also welcome our other guest now on the show. Joining right in is Mr. Ratnesh Goyal, and he is the senior technical analyst at Arihant Capital Markets. A warm welcome to you, Ratnesh. Let's start spotting some ideas with you. And the markets are continuing to be flat with a positive bias. They're holding above the 24,300 odd mark, but there are several sectors that have now slipped into the red. So consumer durables, metals, infra, financial services, FMCG, now they've slipped into the red. Some profits being taken off from the high levels. Your own sense, what exactly are you looking at in this current setup in the markets, which is near a record high?
Very good afternoon. Good afternoon, everyone, to every viewer. No, definitely, whenever we'll reach the new high, because we are railing continue from the last 5 days continue, or even more, even from the 7 days. So definitely, whenever we reach the new high, definitely we will see the some profit booking. But I don't think so. There is any sign of the worry. Still, there is an opportunity to buy on the dips, because I can see that still there is a good put writing at the 24,000 level and the 23,800, 500 level. So I don't think so the market will go beyond that very easily until and unless we will not see any major negative news from the any foreign level or something like this. So I think that any dip is still the good opportunity to buy, and definitely the stock specific action will remain continued. So I always ask the investor, and that just go just whenever there is a dip, just buy it, and don't if you feel that if you miss some rally, so it is a good opportunity whenever there is a dip. So just be calm, and from the if there is any profit booking from the higher level.
Okay, right. So, Ratnesh, any two stock ideas that you can share for all our viewers for today? Last 25 minutes remaining, or anything for tomorrow?
Yeah, definitely. The one stock is the Hutco. Hutco is given the fresh breakout today. Definitely, as of now, it's still around the 7%. But I believe that still there is a good steam left in this stock. So I believe that and the risk reward ratio is still in favor. So just keep the stop loss around the 300 level. I can see the target around the first target in the midterm. That maybe in the next week we can see the 400 or 430 level. So this could be the good idea in the Hutco from the mid cap. And the second one is the HDFC AMC. HDFC AMC, it has given the fresh breakout and it is making continue higher formation now after the consolidation. We are seeing the good breakout. So I believe that HDFC AMC could be a good bet with the stop loss 4140 for the target 4300 level.
Right. Namaste Ratnesh ji, a very warm welcome to you, sir. Hardco is a great choice, a very sharp breakout that has happened, and of course volumes on Hardco today, Sakshi, are phenomenal. We are tracking 2400 crores as far as today's transactions on Hardco are concerned, and I believe this would be a record high on the counter. Let me just check all-time high on Hardco. Yes, it is a volume breakout as well, and this is about 3.8 times the 5-day average. 8.3 lakh share, 8.3 crore shares have been traded. Ratnesh ji, when you look at the broader markets in the pharma space, a very nice chart structure coming into Lupin, into Sun Pharma, into Aurobindo Pharma. What according to you would be an outperformer within the drugs space?
Yeah, definitely the Lupin and the Aro Pharma and the other pharma stocks performing very well. So you know that even the Lupin has given the fresh breakout of the rounding formation. So definitely Lupin is the best pick in this stock in this segment, and it is outperforming the sector. So I believe that definitely Lupin is still there is a steam left. And it has given the fresh breakout. So keep the stop loss 1700. Even for the fresh entry also, one can take the fresh entry. If someone holding the from the lower level, still they can hold. Keep the stop loss 1700. I can see the target around in the midterm. The first target 1800 and then 1850.
Right.
Okay.
Sakshi, let's just look at the Nifty. This is the weekly expiry day, and at 24,294. This is just mild profit booking, nothing should be worried about. And remember, we had talked about how gaps are filled. So an early morning gap up of about 100 points. We hit 24,370, and from now on, we've seen a 70-80 point dip. The gap is now filled. Today's pivot is 24,270. Let us see what happens in the next 22 minutes. This is the exact expiry trade. Nifty closing flat, nothing happening much on the bank Nifty as well, flat as flat can be, but the broader markets are doing phenomenally well. We tracked 19 indices for you, ladies and gentlemen, and a vast majority of them were in very strong uptick during the day. Out of 19, 14 are in the green, led undoubtedly by the pharma index. The Nifty Alpha 50 is doing pretty well as well, and both the mid cap and the small cap indices are up 0.5% each. This is how the broader market is functioning. So far, 1320 stocks are in the green on the National Stock Exchange, compared with 970 in the red. Sakshi, what are you watching?
Remember, Shell, you had touched upon Dredging Corporation early in the morning. The stock is still holding up 5% higher, and the company has now got another order of 157 odd crore rupees just now. This news has just come in, and it's holding at 1340 odd levels and still at that 5% mark right now. Let's ask Ratnesh ji, what do the charts of Dredging Corporation suggest, and whether investors should look at any opportunity that they get beyond the circuit?
Yeah, now, if you look at the dredging corporation chart, it is continuous forming the higher formation now coming to the it's all time high near to the very all time high. So for the fresh entry, definitely it is very difficult because it's very a little bit stretch on the chart. But if someone holding the from the lower level, so definitely still can hold with the trail stop loss. So I can suggest the stop loss around the 1280 for the target in the coming days, 1400 to then 1450.
Okay, so that's dredging cooperation for you. Within the PSU pack, I wanted to also bring your attention, Ratnesh ji, to the insurance space, and I want to now ask you on Life Insurance Corporation yet again. The stock is again crossed that 1000 mark, somewhere close to where its key resistance lies, 2% higher in trade. But where else do you see the stock really heading beyond this? Is it still going to come back, and is it still going to be another attempt to break that range, and will it be?
LIC, Life Insurance Corporation, from the long time we are seeing the consolidation in the stock. Still, it is in consolidation, taking the support around the 50-day moving average on the daily chart. But I believe that still there is a no sign of the weakening. But yeah, definitely consolidation is going on. So keep the stop loss around the 970 level for the holding, and as of now, very immediate target will come around the 1070. But once it start trading above the 1070, we can see the fresh breakout in this stock, and then target will come around the 1200 level. So as of now, there is no sign of the weakness. Keep the stop loss for the position 970.
Okay, got that. So that is LIC for you. Let's again look at some of the FNO movers at this point. Lupin, as Ratnesh has already addressed, is 7% higher, is the top mover today. Laurus Labs follows next, 4% higher. You have Zydus Life, that's also buzzing, 3.5% up. Cummins India, Dr. Lal Path Labs, Persistent Systems Granules, Metropolis Healthcare is a new one that's entered now, HCL Tech, Coforge, TVS Motors. These are some of the other stocks that are hovering higher within the FNO pack as of now. On Cummins India, would you have a view, Ratnesh ji, the kind of move that we are seeing, is this sustainable? What should one do?
Cummins India definitely, from very long time, it is outperforming the market and continue making the high formation. So still there is no weakness in the chart, but for the fresh entry, I believe that is still now little bit stretch for the fresh entry in the chart. So for the fresh entry, just wait for the little correction. But if someone holding from the lower level, just hold with the stop loss. Trail the stop loss, and that stop loss coming around the 3900 level. So with the stop loss 3900, just hold position for the target 4200 and then 4350.
Right, ladies and gentlemen, for the record, we will mark Mazagon at 20%. That's how life is, and that's how it is. Very, very strong move coming into the counter. And now lots and lots of block deals. Sakshi, I'm just going to send you a photograph of how the block deals are working out on Mazagon. 19.33 is what you see, and this is something that has done a fabulous job as far as prices are concerned. We've discussed 10% on Cochin. Garden Reach is 7.9, and we have strong moves coming into other counters as well. It's very difficult to take a technical view on these stocks. It's best, we keep quiet about it and just enjoy the rally. Ratnesh ji, would you have a view on how the move is getting concentrated and on the upside in railway stocks? Look at RITES, 7% higher, 747. A strong move coming into IRCON, 279. Railtel at 485. Strong moves on this space as far as the public sector railway stocks are concerned. Would you have a favorite here, sir?
So my favorite one is the RITES, because RITE has given the today fresh breakout. So I believe that we can see the very big target in the RITES. So definitely RITES, and the risk reward ratio is also in the favor in the RITES. So keep the stop loss around the 710, and I believe that the target we can see, the midterm target I am telling the 850 and the 900.
Right, that's the one that's coming in on the right. And Sakshi, the final trade on Mazagon Dock, a single trade is 69.6 crores, and that's when the circuit has hit. So that's how it is, ladies and gentlemen. A very strong move on Mazagon Dock. Very one with deep volumes. Let me just confirm the volume to you on today's trade as far as Mazagon is concerned. Last I checked, it was 6,000 crores. Now it's 10,452 crores. So 10% of the market capitalization has been traded today, ladies and gentlemen. I'll give you another interesting statistics. 2 crore shares, Sakshi. Let me get that data for you. Why don't you just take over for a while?
Absolutely. Well, there is a lot of action happening in the broader universe. Several of the stocks hitting double digits and 20% uptake. Let me reiterate for all our viewers, some of the stocks from morning that we had been touching. IFB Agro is now at 20% upper circuit. Mazagon, we already know, is at 19.9%. We also have Galaxy Surfactants, that's up 15% higher. You have GE Power, that's up 12% today. Nelco is up by 12%. Strong move on that one. You also have stocks like AstraZeneca Pharma, that's up by 11% after a long haul. AGI Greenpack is up 11%. Bliss GVS Pharma, another one that's going strong at this point in time. And then you also have stocks like Cochin, that is up 10% odd, and then you have Honasa Consumer, that's also up by about 12 odd percent. Let's get Ratnesh ji to talk about Honasa Consumer. You know, it's been a pretty volatile space, the new age internet companies, and especially Honasa Consumer from the time it got listed, Mama Earth. How are you looking at this fresh bounce that's coming in on Honasa? 483 currently.
Yeah, definitely. Honasa was, this is a new listing. I don't have very long, so much data, but whatever we have, it was a consolidation from the month of January. Now, today it is trying to give the breakout of the trend line, downward sloping trend lines. So I believe that definitely it is giving the good close. So it could be a good BTST as well as for the holding. Keep the stop loss around the 460. So I believe that we can see the target around the 500.
Okay, got that. Landmark Property is also doing well, 20% uptick for that one as well. Strong move across the textile space. It's Monte Carlo Fashion that's actually taking it away. Remember, this is one space that I've been touching base upon since the last week. It was Raymond, Zodiac Clothing, Nandini Fashion, Arvind, and now Monte Carlo Fashion also doing very well within that textile space. Ratnesh ji, anything that catches your attention within the textile space, fashion, retail?
We have seen definitely the good move recently passed in the textile state, but ABFR, I believe that definitely ABFR is continue higher. So I believe that there is a still stream left in this stock, even for the fresh entry also. Keep the stop loss around the 325 rupees. I can see the target around the 360 rupees.
Okay. Got that. So that's the targets from the retail space on AB Fashion that we will continue to keep an eye out on. Looking at several other pockets, let's look at the pharma space. What else is buzzing beyond Lupin? So Laurus Labs we touched upon, it's still 4% higher. Zydus Life's Granules, Ipca Laboratories is now 2% higher. Mankind Pharma, Sun Pharma's Glenmark, Aurobindo. There's a buzz on Torrent Pharma as well. The entire sector seems to be buzzing. Are there these diagnostic names that are also looking interesting to you at this point in time, Ratnesh ji? Laurus, Dr. Lal Path Labs, anything that looks positive?
If you comparison between the Lal Path Lab or the Laurus, so if I have to choose any one stock, so I will go with the Lal Path Lab, because Lal Path Lab is forming the good formation here, and we have seen the good volume activity at that lower level. So it's showing that Lal Path Lab has made the base formation. So keep the stop loss around the for the holding period around the 2800 for the target around the 3100.
Right, ladies and gentlemen, we are now at 3:20. Just 10 minutes left to wrap up what has been a very exciting day apart from the weekly expiry that we've seen on the Nifty. Look at the IT index, again up 1.2%, 37,760. I'll request the PCR to fire the long-term chart of the IT index. You'll see it now trading at its highest since 15th of March. A very, very strong move coming into this index, and of course we've seen a very, very good move coming into stocks such as TCS. Infosys is above 1.4% at 1651. Look at the blowout that's happened on HCL Tech, 3% higher. Just about 3-4 days ago, about 2 percentage point equity was sold by promoters in HCL Tech. That's working very well for new buyers. No stopping Coforge. You have 5900 on Coforge at 3.9%, and of course a record high on Persistent Systems, 4755. Remember, this stock had also split a couple of months ago. Where is volume? Well, volume is only in Coforge. 2 times the 5-day average, 11 lakh shares on the board as far as prices are concerned, and a strong uptick. You have Infosys 0.5% higher and 1.2 times the 5-day average that has come in. All-time highs are only on Persistent so far. We'll do a detour into the mid-cap space and look at some stocks that we may not have talked about. JSW Infra, this is again a record high, 354.90, 1.9% higher as far as the mid-cap space is concerned. Godrej Properties, Sakshi has been backing this stock over the last 1 week. Again, fresh record high, 3306. And a quick detour into the small cap index. Looks like a pharma day. Glenmark Pharma 1.25% higher at a fresh record high, just at a kissing distance from 1300. Cochin Shipbuilders, we've discussed. Ratneshji's marked HUDCO. There's another stock, RK Forging, about 0.5% higher at 960 rupees, again at a record high. Sakshi, what are you watching?
ICICI Bank is now pulled to the day's high level, 1233 right now, 2.6% higher in trade within the banking space, and that continues to contribute. Ratneshji, within the private sector banks that have recently shown some move, HDFC Bank was quick to see profits being taken off at the high point. The momentum did not sustain, but ICICI and Axis, Kotak Mahindra also have continued to maintain their move from last 2 days. How are you looking at the banking story unfold within the large private banks? Which counter looks positive?
Yeah, definitely. Axis Bank, ICICI Bank is still performing very good, but still now if you have to choose any one from in this space, so my best pick will be the ICICI Bank, because it's outperforming in the sector. So definitely that is the best pick. So I believe that still there is a stream left, and for the fresh entry also we can take the entry in this stock with the stop loss 1200 rupees for the target 1300.
Okay, got that. Within the IT space now, it's HCL Technologies that of course has been riding very, very sharply, and within the broader markets it was Coforge. Let's also look at some of the other counters that are pulled up. Yes, Coforge is at a 4% uptick. It's now leading the move. Persistent Systems is already marked by Shell. HCL, Infosys, Tata Consultancy, Emphasis now L&T Technology Services. These are all the counters that are buzzing. Where do you think the momentum will continue tomorrow within the IT pack, Ratneshji?
So I believe that if someone need do the BTS, so definitely Persistent is the best fit. But with that, I like to go with the Coforge also. The Coforge is the also after the correction we are now seeing the base formation in the stock. So I can see the target around the 6,000 rupees in this stock, and keep the stop loss around the 5,800 rupees. So Persistent and the Coforge both are the best fit.
Fair point, ladies and gentlemen. We are now just 6 minutes away from Thursday. close as far as markets are concerned. Remember, we will not be getting any overseas cues because Wall Street is shut in America for today. The country celebrates its Independence Day. Let's just try and wrap up what we've seen so far as far as prices are concerned. Now, within the NSE 500, there are about 29 stocks that have hit record highs. Let me mark a few which we generally don't talk about. This is Tube Investments, TI India, 2% higher, 42.87. There is a very strong move coming into Grindwell Norton. This is from the capital goods space, 29.50, 1% higher. And of course, Sundaram Fasteners, 14.06, down about a percent, but nevertheless it hit record highs. Let's look at circuits. Sakshi's marked IFB Agro, I've marked Mazagon. This is up 20 each. You have a 10% on Cochin. There is Kaya, which Sakshi discussed in the morning, again 10% higher. You have SR Shipping. Normally we don't mark this stock for various reasons. 10% higher at 54.82, and of course you have counters like I just rather not take these names on air. They create a problem a little later, but this is how it is. These are the names that I could think of in terms of circuits. Is there a seller only circuit? That would be very interesting. Of course there are many, but they're just 2%. Let's look at a 5% circuit. Okay, JP Associates, 5% lower, 8.57. Why am I not surprised? Sakshi.
Let's also draw attention to the oil and gas space, and ONGC just got my attention. Ratneshji, could you look at ONGC and tell us, towards the end there is some buying that's coming in on ONGC stock. What would this indicate?
Yeah, definitely. Just now we can see some volume in this stock. So definitely, maybe for the tomorrow we should keep on eye this stock above the 280. We can see the target around the 288, 290. So definitely it can be a good bet with the stop loss 274.
Okay, ONGC is something that we can keep an eye out on. LIC we were talking about, it's now moved even further, 2.5% higher in trade. How about the power financiers, REC and PFC? Where do you see the counters headed, Ratneshji? It's been in momentum for the last two odd trading sessions, strong surge yesterday, and it's carried on the move, flattened out after the day's high point. Your sense?
Both stock doing very well, and both are outperforming. So definitely still for the if we look at the PFC, a little bit hurdle around the 540 543 level. So once it cross, we can see the target 560 575. So definitely the PFC is still a good buy. Now if you look at the RSC, so RSC still this is also the good stock and outperforming. So for immediate target will come on the 592 with the stop loss. The stop loss will come around the 565.
Okay, got that. Let's start wrapping up the markets. We're 2 minutes to the day's close as well. So we'll thank you, Ratneshji, for being with us. Before going, would you want to suggest any trade on the Nifty Bank for tomorrow?
The Bank Nifty, I will say that definitely the if any deep around the 53,000, so it could be a buying opportunity for the target 53,300.
Okay, got that. We'll keep an eye out on the trade right there. There's news flow coming in from wires that European Union is looking to apply extra duty on imports from China. It'll be important for us to see how the Asian markets really react to that tomorrow, and if there is any dampening impact on that one, the entire space. We'll look at that tomorrow, but for now we'll start wrapping up the trade. 21 points higher on the Nifty. It's managing to hold on to that 24,300 mark, just at that level. The Nifty Bank, however, is flattened out and is now turning with a negative bias. About 53,000 is held on but there's a 13-point down tick that you can look at on the Nifty Bank right now. It's the financial services space that has dragged. Private banks have flattened out too. FMCG, infra, media stocks, these are the other pockets in the markets that are flattened out. It was a pharma day. The Nifty Pharma Index up 1.5%, a very strong surge, followed by the IT space. Of course, it's a heavier weighted index. Autos, broader markets, they continue to hold some strength within the market space, and the PSU stocks also held on to the gains today. Of course, the top mover on the trade towards the end of the session, Tata Motors moved to the top spot. You had about a 2.7% uptick on this one at 1,002. ICICI Bank, HCL Technologies, Sun Pharma, TCS and Infosys remain the other top movers as far as the Nifty gainers are concerned. HDFC Bank dragged the most, Bajaj Finance, Adani Enterprises, Wipro, Tech Mahindra and L&T. These were the other top drags. On the F&O space, Lupin, Cummins India, Laurus Labs, Zydus Life, these were the top movers. And on the downside in the F&O space, the stocks that dragged the most included Canfin Homes, Ramco Cement, Shree Cement, Bajaj Finance and Astral at this point in time. But clearly, it was a defense day as well, with the Mazagon Dock, the stock of the day, ending 20% higher, followed by a strong move on Cochin Shipyard, a 10% uptake, and Garden Reach that continued to rally over 8.5% higher in trade. So the defense moves also continue to be strong. Anything else, Shell, that you want to add?
Yes, actually, I think tomorrow will be the day of insurance companies. There is deep value to be had in the public sector space. I won't take any names, but just keep an eye out on and study the delivery patterns of the three listed Indian insurers from the PSU basket, Sakshi.
All right, viewers, we'll wrap it up at that. Many thanks for tuning in, but do stay tuned as action continues on the other side on your screens beyond the stock market hours too. With that, it's a goodbye from me for today, from both Shell and me.